Welcome to our 2016 review and 2017 Outlook video. I'm joined today by Chris Brown, our Chief Investment Officer and Chairman of the Investment Committee. As you're probably aware, Chris and his team are responsible for the construction of all our client portfolios. So Chris, we shot our 2016 Outlook video this time last year. How have you done?
Last year we said we had three calls basically. One was that currencies would still be a big driver of returns. Secondly, that global equities would probably be the best place to be in 2016. And thirdly, that fixed income markets would be dull and boring and earn you close to the kind of 1.5–2% you got on your coupon on your fixed interest. And to be honest, I think we got 2 out of 3 right, basically. Currencies were the biggest driver of returns, especially if you sat in the UK. Global equities did do well and were probably the best place to be risk reward. But where we were wrong was fixed income. It was not boring. It was up 17% through to the end of August and then lost 9% in the last 5 months of the year. So quite exciting.
So here we are at the beginning of 2017. How have you positioned or adjusted the portfolios for the new year?
Well, I think to answer that, I just want to look back at 2016 just quickly. And we've got a chart here which basically the green line is a measure of how good the news is in the US, the economic data. It's a surprise index, but it really shows you when there's good news and bad news. And the blue line is US equities. And if you look at this chart, the message is that the equity markets have followed the data. So if we just highlight 3 areas, for Q1, you'll see equity markets were down about 10–15% to start the year, and the data was bad. Then if you roll forward to Brexit, you can see that there was a very sharp V down when Brexit happened, but within a few days you were back to where you were, and the data carried on being good, and you got a kind of post-Brexit rally. And then if you go forward to Q4, when a lot of the talk has been about Trump and the changes he'll make and the impact that will have on markets, what you can see is the data's been very good. And although it's tempting to say things like Trump and Brexit have been driving markets, in fact, we think they've been following the economic data pretty closely, and we expect that to continue into 2017. Now, in 2017, the good news is that you've got this kind of tailwind of good data with low interest rates, but the bad news is you've got to acknowledge the fact you're very late cycle here. So the recovery began in 2009, so we're really 8 years into an economic recovery, and we're probably much nearer the end of that sort of cycle than we are the beginning, and that sort of urges caution. So from a positioning perspective, I think we're as balanced as we have really ever been as long as I've been doing this job, and our focus is really on finding as many different ways as we can to make money, to make sure we're as diversified as we can be.
But I suppose at the moment there's a lot of discussion around inflation. I suppose the collapse of sterling post-Brexit, and you could argue we're reaching sort of quasi full employment in the UK. Is inflation something that we should be worried about?
Yeah, so if we just put the chart up, the chart showing our portfolio. So when I say balanced, what I mean is we try and have as many different sources of return, which I show here. Now Q4, you're exactly right, has been about inflation, and a lot of the things that do well in the inflation environment have done well, and especially a lot of the things that do badly when inflation comes have done badly. So if you look at our portfolio, I just want to highlight 2 areas: absolute return and income strategies. Q4 2016 was a good quarter for us in absolute terms. We made money in relative terms, the amount of risk we were running. And I think that it's these 2 areas that have been driving it. Firstly, in the absolute return area, we have a lot of investments that basically follow trends. And the trends were strong in Q4, and they were driven partly by inflation, and we expect that to continue. And then secondly, in the income part, we've had a big focus on buying income that's linked to inflation, in particular infrastructure assets that have payments linked to RPI. And again, these have done well. So in terms of how we do in an inflationary environment, all I can say is that in Q4 we did well, and that makes me feel good about the future. If the question is inflation coming and is it going to be high? That feels to me like a high quality problem. So that's where you get a boom and everything's really great, which we haven't had for a long time. I would say honestly, we worry much more about the other way around, which is where you get a slowdown, you go back to a low inflationary environment, you get a bust. So in many ways, I'd quite like a high inflationary environment to come around the corner.
Okay, well, thank you very much, Chris. Well, we hope you found this video useful, and as always, we'll be interested to get your feedback. All that's left for me to do is to wish you a happy and prosperous new year from all of us here at IPS.